Good morning, traders. Welcome to today's video. It is Tuesday, the 16th of July, 2024. This is your Bitcoin market update. And yeah, we've had a very nice start to the week, really. Now, this has been quite similar to what I spoke about on yesterday's update, how we've had the Monday pump. And this is something that we've been seeing quite often. Like, the majority of this range has always been a Monday pump. And then it tends to get retraced afterwards. But on this occasion, we did get that continuation a little bit towards the end of yesterday. And we're seeing a pullback today, but we're coming back into support. So I think this is a really interesting moment within the market. Is this a bigger shift? Are we seeing a bigger shift in momentum here from the downtrend that we've had? I mean, there hasn't been a higher high. The market hasn't printed a higher high like it did yesterday since May. And we've been in this relentless downtrend as well since the beginning of June, because that was the last higher high. Yes, I know on purpose we did come up and SFP this, but you can't consider that a higher high. So that was the last one. And then it's just been downtrend ever since. And the recovery that we've seen has been, I'd say, perfect, pretty much perfect. There's one level above that I'd be interested in, which is that 67K point of control. However, where we are now, this has done what I would have wanted to see as just a typical mean reversion. This is the bounce after you get a capitulation. Now, ideally, I'd like to see us range again once we've had this bounce. If this can extend to 67, great. If it can extend to 67, we just go level to level. If it gets through 67, we're going to 72. But for now, I do think that what we've seen this morning with this bit of a move down has prepped us quite nicely for a new range to form. We've got a decent, if we come back down to where this VWAP is to here, there's a decent 5% range to trade here, which as a trader is quite nice. We haven't really had a range of this size for quite some time that wasn't just clearly one direction. When we had this low, then we knew that the only trades that we could be looking for realistically were longs. Okay, we were expecting after taking the lows that we were going to be seeing a bounce, and it was just a case of buy dip, hold it. And now finally we've had that expansion up to take out some highs to get a bit of a change in market structure. That's going to bring in some late longs into the equation, which have been stopped out this morning. And that should mean that instead of it just being like shorts in complete control like we had on the move down, longs getting completely wrecked every time, we now have a bit more of a balanced two-sided market, which means that we can trade in both directions with a little bit more confidence, which is very, very nice to see. Now, where we are on this chart, I mean, it's very, very clear. We have bounced into, and I'm just going to zoom out slightly so you guys can see. We'll do a little bit of top-down analysis. There was one gap on the weekly time frame. Okay, we had this gap between that 65K down to 63,800. There was that 1 week gap, and that has now been entirely filled. So if we look at the daily, we had that close that almost closed through the entirety of that gap there, this being the price action that we saw from that week of Monday, the 17th of June, taking us to the 23rd of June. So that week there, filling the gap that was created between the 2 weeks either side of that. And what we've also seen here, the 4 hour being the real nice time frame to be looking at and to be trading right now, is this was that weekly point of control. So I'll just make this a little bit clearer so you can see. There is your weekly POC, slap bang on that 618 golden pocket level. So that's 64,916, 65K basically, had the confluence there where we had the weekly NPOC. We had the gap, the top of the gap, we had the 618. Now, this is also clear from a TPO perspective, right? If we look at this chart here, then once again, when we look at the TPO, we did have both the time and the volume points of control around here. Now my VPOC, and this is on an aggregated chart. So what I was showing you on TradingView just a moment ago is Coinbase, and that's what I'm using mostly because that is where we're seeing most of the volume right now. And that is the market that's leading. Like when we're seeing that spot is buying, the moves tend to get those continuations. Like we've actually seen a strong recovery from the spot market from Coinbase. And for the last couple of weeks, we'd had serious weakness from Coinbase with a lot of selling going on. And perps are just really just kind of chopping around in between that. There's not a whole lot going on there. So for me, the Coinbase chart is what's really giving the edge for myself at the moment. But also looking at these aggregated charts, we can see here that VPOC at 65,100, you can essentially say if I change the tick size by like 10% here, it will probably shift to 65k by the time that I do that. So it's very, very close. That 65k is a key level where we do have confluence. Now, the other interesting thing that we have here is from where we are right now, this did break through that anchored VWAP where we have from this entire move down, we do have that anchored VWAP that has been essentially, acting as resistance the whole way down. And we're now starting to hold that potentially as support. So I'll pop it back over here where this is a little bit clearer. So you can see the VWAP from this high back on the 7th of June. This now for the first time potentially acting as support. And this brings us into the next thing that I'd like to talk about, which is what my bias has been for a while now, but that we are in a reaccumulation schematic. And we can look at this as the jump the creek scenario. So when we're looking at reaccumulation, we are looking for a spring, first of all, which is to take out major lows to come into liquidity. And then subsequently, what we want to see is a bounce that gets through the major resistance on the chart, flips it into support, and then we can start to look for new highs after that. Now, it doesn't mean that we're just going to blast new highs, but I do think that like my bias is I'm fairly confident. And like I've said in previous streams, I don't really care if it does go lower, because what I am certain of is that we are going higher this year. And what I'm very uncertain of is that we're going to go any lower. So for me, the even if you were expecting like 52k, 48k, 44k, I still think it would have been wise to have taken some exposure on the last dip, because the only thing that, in my opinion, is certain is that 54k will seem incredibly cheap in 6 months' time. Yeah, that has been my bias for some time, and what I've been kind of reiterating is that you don't need to time the exact lows, because they are going to be fairly insignificant, whether we bottom on 54k or bottom on 52k, or indeed even go down below 50k's down to the 48s or whatever. I think that's fairly insignificant in the grand scheme of things. So getting exposure whenever there are lows, I think, is quite important. Now, something else I did want to touch upon here is also the reaccumulation schematic. Now, this has been something that I think has been quite clear for a while now. So any Wyckoff people that if you study this, then you'll know what we essentially have within this range. Okay, is I could almost look at this section on the chart here being the phase A, where you make this high and you drop into a range. Okay, because that was the first time that we saw any major rejections. So back on the 5th of March, such a long time ago, back on the 5th of March was the first time we saw any rejection from this uptrend. Then what happened is we made a higher high, creating divergences. This is why I've got my my RSI on here. We had the high, the initial high, the first rejection, the first flush, all right, which we're looking at that phase A. We came back up, made a new high with divergence, coming into this phase B section. We then have this long phase B that comes down, takes out these lows, first of all. All right, you come down here, you take out these lows, you have this initial spring, right? So a little bit of a spring early on within this reaccumulation, comes back up, all right, lower high here. So you distribution up towards the highs, similar to what we see here, all right, come back down. Then we get the proper spring in phase C, which is what we've seen here. And now what we're essentially looking for, I don't know if you can see this, but you have this thing called jump the creek. Now, what I look for from that is the way that I mark this as strength. When the market can break through this, I use an anchored VWAP from this high. So the way that I would mark out any like Wyckoff accumulation or indeed distribution, I would take the basically looking at the resistance that comes from this high during phase B to be broken through that phase C, phase D, and then we look for that expansion higher. So essentially this is what I mean. And you see this with altcoins all the time, is we're looking at this high here. That is the river that you've got to cross in order to flip that from what has been resistance into support. If it can hold, we are expecting new highs. Now, I don't think that I don't know if we're ready to see a big expansive move once again here. Maybe we are. Maybe we are. We have seen this previously, okay? Where as soon as we start going, and I was saying yesterday, it looks like it's very similar to back here. Right, what's going on the chart right now looks incredibly similar to what happened back in February. Okay, you had that big drop, you had the spring, a reaccumulation, a slightly different schematic here because you did make a new high and then you sprung, then you reaccumulate, and then once again you do this jump the creek kind of thing. Okay, so once you clear this, flip it into support like it did here, right? So you flip it, hold to support for a week or two, and then you get that continuation. I think we are seeing a similar thing here where we've seen that big markup taking us back towards highs, and then maybe we do see this continuation up towards 100K over the next few weeks. Now, the preference for myself is, of course, like I say, I'm not looking for that to happen immediately. I would like to see consolidation around here. I'd like to see this just confirm as like, okay, we're all right here. We're looking good. And then what we get is that markup later on. We're always looking at like August, September, October to be the next big rally towards the latter stages of Q3. And as we go into Q4, that's when I was like, okay, we're going to be hyper bullish end of Q3, Q4 going into next year. But until then, I think still keep things fairly slow, keep things fairly calm, and just trade within this range here. So as long as we're holding, and it's okay to run below it, but as long as we are within the vicinity of, and you can look at that with your standard deviation bands, as long as we're within the vicinity of this VWAP, I think all is okay. We can be expecting higher prices. If we do start to lose 60K again at this stage, then that's when I would start to flip bearish. But any move down towards 60K, I would consider as a strong buying opportunity, and that is where I would look to add to any long positions that I've got, which are quite a lot right now, quite a lot of long positions right now. I would look to add to those, expecting that we are going to be making new all-time highs next month, the month after that, and just going into a every day is a new all-time high, every day is a new all-time high kind of situation. That is my expectation, and that has been my bias for quite some time. I was slightly wrong with the long, slow summer thing. Now, what I was looking at previously is there are two different ways that you can look at these schematics. So what my previous plan was, and I had mentioned this on streams before, I was thinking we may have seen something like this, okay, where you have the same phase A and B, right? You still come up and you make this lower high, and then you have what I was saying as the long, slow summer, which would for me have been a situation where we come down, we don't take out the lows, we don't get the spring, because essentially we'd already had it, right? We'd already done it once. We weren't going to get it again. And then we could see the long summer that then takes us to new all-time highs afterwards. That was initially my bias. Now, because we took out the lows, all right, it's just changed that first schematic that we see here into the one that I do believe we are now almost certainly in, which is this one right here. So subtle differences, but the same outcome at the end of the day, okay? You still jump that creek. The only difference is we've taken out those phase B lows. We have created a second spring. but the outcome afterwards does end up as much higher prices. Which, again, going back to what I said previously, I don't think it really matters about timing the bottom. I just think if you see dips, you should be exposed to those dips. And if you're not, then it's a little bit silly, because what are you left doing now is prices up from a really good opportunity to buy. We're up 20%, right? Now, I still believe that even here at 62K is a good opportunity to buy, because I do strongly believe we're going to be massively surpassing 100K by the time that the election is going on, for example. I do believe that that's going to happen, but you had a good opportunity down here. And I think most people, as is always the case, most people did miss that opportunity, because what happens when price is going down? Who are the loudest voices? Who are the people that are most confident? Because price is going down, it's the bears that are screaming the loudest, and that creates fear within the market by everyone thinking, oh my God, we've taken these lows, we must be going to 44K. I'm not going to buy now because everyone's telling me we're going lower. It's insignificant. Yes, okay, it could have gone lower, but it hasn't. Right? And you don't know that that's going to happen. And the people who are telling you with absolute confidence when price is going down like this, that, oh, we're still going lower, we're still going lower, that's what creates the fear. And that is what has created on a couple of occasions below, right? When price came to 72K, I bet most people were like, oh, I wish I had more exposure. I wish we could just drop below 60K again. What happens when they drop below 60K? Everyone gets bearish. You're too scared to buy. Then price bounces and they're like, shit, I should have bought. And then everyone's telling you new all-time highs are about to happen. Yeah. And what do? They buy the top. And then price naturally comes back down. They buy the top because they wish they bought here. And then they're still hoping. They're like, oh, I wish we could just go back down there again, but it's probably not going to happen. Everyone's telling me we're going to new all-time highs. So they buy it here. What happens again here? They are wrecked from this move down, from buying too high. And B, they're not buying the dip because they're listening to the voices that are telling them that 44K is coming. And then once again here, you get this little middle ground and no one really knows what to do here, because they're like, it's too high to long. But it's not high enough to short yet, and people get caught up, and then we start to put in a little range. We just wreck people around a little bit, and then we get that continuation. So that's the kind of the market we've been seeing recently. It hasn't been easy. It really hasn't been easy, and that is why for myself, I have been much, much more long time, like a higher time frame perspective with the market. Overall, like I do have that just longer term view. For myself, I know the conditions aren't favorable to trade for my trading style at the moment. So I just don't really bother with it. I just look for my longer term positions. I just buy into the dips, and I know that I'm going to be rewarded for that in the future. And if I'm not, okay, if the bull market is over, which is highly unlikely, highly unlikely. But if the bull market is for some crazy reason over already, which just makes zero sense at all, then I take that hit and I take the drawdown and so on. Like I'm exposed and I'm fully confident in my idea. And that's the way that I've myself have been trading. But anyway, I go off on a tangent because that's the way that I'm trading right now. It is from a longer, like a broader time horizon, so it's not so much day-to-day technical that I'm looking at. Some other things that I do think we can touch upon quickly. I do see a comment in the chat. There is a CME gap. Yes, there is a CME gap. And I'd be entirely okay for that to get a fill, a partial fill, get a bit of a sweep down there. I think that would be okay. But what we see often in this is a gap that is created from a move like this. Okay, it doesn't really, you do get breakaway gaps. They do happen, right? And if breakaway gaps do happen, the things that you don't want to see are when you get a shift in the market, it does create gaps, and that is just very normal when you get this big shift. And we've seen this previously. Okay, can go back all the way back to, I mean, here, yeah, okay, you do get these breakaway gaps. This was the last time that we had like a major one. Everyone was expecting it to get filled, all right, and it never did. Never, ever, ever, ever did it get filled. Now, the ones that you have to be aware of are these middle of trend gaps. Okay, so when you're already trending, the ones that you have to be aware of, if price is doing this, okay, and then suddenly it's like boom, and it gaps up, yes, the market will seek to do that, to come back and fill it. But what you have, if you're in this downtrend, it's very normal, and we see this from legacy markets all the time, to go gap up, just get away, because you don't want to give an opportunity ever for these short positions to get out. All right, that's a shift in the market. It's a shift in momentum. It should never come back there. If it does come back there, those shorts are no longer trapped, and therefore we likely go lower. So if we are seeing a major pivot, and it happens on highs as well, where you'll put in a high, and there have been examples of it here, okay? You put in a high, you gap down, that has been a major shift in the momentum from the market. It doesn't come back to get it. Now, of course, eventually, after a few months, you do, because naturally markets just always go higher, and that's just the way that things work. The downside is only ever corrective, unless it's going to zero, unless it's dying. But if it's a decent market, if it's a healthy market, markets only ever go up, all right? Unless a company dies, or unless Bitcoin goes to zero and the whole network collapses, it will go up. That's just markets, because cash is shit and sucks. But you get the idea. These breakaway gaps do happen, right? But it's the ones that are in the middle of the trend that you do have to be aware of. I could consider this as a breakaway gap, okay? Because this is a shift, and as long as we are staying above there and not filling it, then that is bullish. If we do come down and fill it, then I'd start to change my idea. I've marked it on my chart. It is a level that I would look to trade off of. Okay, and if we actually look at this from here, where is that? All right, we can just go to this. It takes us back down into what will probably be, right? Into what will probably be. We mark our low here. We mark our high here. The gap will have been at 8 p.m. on a Friday night. Where is 8 p.m. on that Friday night? It is, oh, look, it's at our golden pocket. So if we do retrace from this and we do come back down to 58, now I don't want to see acceptance down at 58, but if we do say we drop, we put in a bit of a downtrend, we start to shake people out, and we get a quick recovery from that, then I think that is absolutely fine. Like I say, I'm still expecting fairly slow price action, a range to form. I'm not looking for new all-time highs already. A 61.8% retrace back down to fill the gap would be cool. But if we are truly bullish, we shouldn't be going back down there. So preference to me is, yes, we still form a range here. I'm not sure if we go as low as 58. We could do a partial gap fill down to 60, for example, just dip a little bit below 60, keep ourselves within the vicinity of this VWAP, and just start to consolidate around that before an eventual break that takes us like August, September is when we're looking at like those trending moves to start again. Anything else with the Bitcoin chart that we can have a look at? Is there anything else from here? Because I think we can probably, like, other things to consider is anchored VWAPs from these lows. Okay, that now becomes important support. If we were to get a quick drop down, then that will come into these anchored VWAPs here. That would be the gap fill, that would be all of that. So that's potentially something we can be looking at. We don't really have any major news or anything today. I don't know if there's anything that could really move the market enough to get a drop straight away. And by the time that this maybe does come down there, that anchor VWAP is likely to be up towards that weekly open kind of area again. The other thing that it is worth noting, of course, if we are looking for downside, is there's not much of a wick on that weekly open. All right, it did open strong. We do have a lot of weekend price action that could be corrective. But again, it just goes back to the thing, like if we are to be lucky enough to get a move down to 58K, I think that would be a fantastic opportunity to bid into that area. The only time that you'd start to become concerned about that, I would probably say is, let's look at this range at the bottom. Let's say acceptance below that POC. would start to look a little bit sketchy. So there's a lot of stuff lining up. When we look at that as the spring, okay, to come back in and test it, to come back down, fill the gap, hit 58K, hit the 618, fine. But what you really do not want to see, and we have seen occasions like this before, is a drop below, and then we start to butt up against that as resistance. And then that's when we start to look for 52, 48, all of those levels. But still, in the grand scheme of things, in my opinion, it would be insignificant. And we've had opportunities to take profit in the meantime. Anything else that we want to cover today? I think really like the order flow is, I mean, we'll touch upon it. So if I just bring up I'll bring up Agra and we'll have a look at this. We've seen a pretty good, pretty strong bid from spot. I need to reload this and bring it up over here. Let's just bring this onto the 5-minute chart. Now this had been through the last week or so, where what we had seen, okay, was that spot was leading the recovery. Okay, then what happened in the final leg, which is why we've seen, like, I like what we've seen this morning. I like what I'm waking up to, is we go to this second part of the chart here. What happened here is, for the first time, perps played catch up. All right, they overtook spot from a delta point of view. So you look at this spot leading, spot leading, spot leading. You're creating these bullish divergences on perps. What happens right on the end is very typical. It always happens. Late longs get trapped, then they get wrecked. What we also had up there was that weakness from spot. Okay, you can see that when price was up here at 63, there was profit taking going on. Okay, price makes a higher high. The delta cannot continue to push through that. You don't have that continued strength here. And then you do get this rollover as late longs start to join in the party. They get trapped. Now what are we doing? We are creating some bullish divergences again here. So I do think a range forming between the 62 to 60 to 65 level is what we're most likely to see at this stage. And when you actually look at the chart here, there's some nice imbalances that can come back in, fill in some of this, maybe test up towards that 64,600 before getting another retrace lower. So now we finally do, like, yesterday was a bit of one of those that I was kind of saying during the stream and during the video, there's not a whole lot of confluence we can really work on here, but now we've got that confluence, we've got levels locally that we can look at, we've got nice single prints that have formed, and then you can just start to trade it in this kind of manner, really. Okay, you've got a nice move up, you've dropped down, you haven't yet broken the uptrend. Okay, we've not made a lower low here. But what we have done is seen a significant rejection. Now, I'd say if there is to be a bounce that takes us back up into these imbalances, that's quite a lot of time spent up at these highs. That will be difficult to break through. So if we are to get a deep retrace into that starts to test back up into that 64.4, 64.6 kind of zone, it would be a reasonable opportunity to look for shorts, maybe to take out these lows. We formed a nice like just range here of almost equal lows, where you have one that's here, 62,360. You got one that's at 62,320, and you got one that's here at 62,410. Fairly equal lows. They could be something that could be targeted for these single prints here, and then you just continue to form this range, another kind of corrective move to what we've seen. So some nice levels to be looking at. I think also, I haven't checked this yet, but if I go on to this chart here, then we have left behind, I think, the previous day POC. No, actually, we have just tapped into that previous day point of control already. So that was there at 62,800. Price has come down into that, but of course, we do have these imbalances below, and there are some naked points of control that are slightly below us. That, once again, do lead us towards that same area where the CME gap is on the chart. So yeah, that is kind of what we're looking at. Some nice little range to form. I'm just going to pop this on here. We're going to look at the session volume profile on Coinbase. But yeah, I would imagine we're looking at that previous day point of control has already been tested. Yep, so there we are. We've run just slightly below it, and then it's a big drop down to 60K if this doesn't hold. So looking for that range right now. kind of just repeating once again, looking at these single prints down here oops, sorry, I didn't have it on my screen. we've hit the POC, previous day point of control here. And then looking for this area of single prints to hold for now, and probably looking at this area to be resistance, and we can look for scalp trades in between that area. Maybe come back into a test of this POC, the daily point of control. Like, let's say if we trade within this zone today, then we do have an MPOC above us that could then be like boom, boom, and we can get kind of this price action. But looking at the points of control, looking for where your balance is, where your balance is, where your balance is, and looking for where your imbalance is. Okay, imbalance, imbalance, imbalance. Then those are the levels to be trading off of. Add some confluence in with fibs, add some confluence in with your high time frame levels, such as your monthly open, add some confluence in with your VWAPs, for example, which we will be looking at as a downtrending day today. So bounce back into VWAP could set up a nice short opportunity. Those are the kind of things to be looking to trade. But yeah, I think on that note, I'm going to wrap this up. This has been a half an hour long video. Always the case. I mean, there has been quite a lot to cover today. But that is, yeah, I think that's everything that we really need to go over. So have a great day, everybody. And I'm going to continue on with the live stream. And we're going to look at some Ethereum, some Bitcoin, all of that kind of thing in a moment. But yeah, please do hit the like button if you enjoyed this. Check the links below if you're interested in joining the crew. Also, if you'd like to just support the channel. We are partnered with and supported by Blofin and WooX. They are two fantastic exchanges, so if you'd like to trade over there, get some discounts on fees and some other juicy goodness, then do click on the links below. We very much appreciate that. But yeah, have a great day, and I'll see you in the next video. Cheers, bye-bye.